Welcome to Thriving in the Digital Age, your go-to guide for navigating the ever-changing world of business, technology, and innovation. With your host, Joe Christ, a seasoned entrepreneur and tech enthusiast, here to connect you with the leaders shaping our future. Discover the secrets to thriving in the digital age. Each week, we'll dive into practical insights, cutting-edge strategies, and the latest trends to help your business not just survive, but truly thrive in today's digital world.
Hey everyone, welcome to another episode of Thriving in the Digital Age. I'm your host, Joe Christ. Joining me today is Caleb Avery of Tilde. Caleb, thank you so much for joining us. Can you tell the audience a little bit about yourself?
Yeah, absolutely. So I'm Caleb Avery. I'm the founder and CEO here at Tilde. I started my career in the payment space at 19. So I started going door to door, selling payment processing services to small business owners. Probably not what all the listeners were doing at 19 years old, but that was the start of my crazy journey in payments. And as my career went on, I started to see that more and more merchants wanted embedded solutions. They wanted something that did much more than just power the payments for their business. And so I actually took a step back from that first company and started doing consulting and angel investing for vertical software companies. Vertical software companies are, a solution like Toast that provides restaurant owners with much more than just payments for their business. And so I felt like that was the direction, that the industry was heading in. And as I started working with these vertical software platforms, I started to see that there was this bigger opportunity in the space, which is ultimately, how I started Tilde and built out, what became PayFac-As-A-Service.
Could you elaborate a little more on what PayFac-As-A-Service actually is and who would be using it?
Yeah, absolutely. So I think it's always helpful when you're using, there's so many acronyms in the payment space. Let's kind of break it down. So let's start with what is PayFac. And so when you think about the PayFac model, first off, it's short for payment facilitator. And well-known payment facilitators that you probably heard of are companies like Stripe, Square, Braintree, PayPal, Toast. These are companies that have gone through the very laborious process to register with the banks, the card brands, and the processors to get registered as what's considered a master merchant. And so the benefit of this master merchant, sub-merchant model, which PayFacs employ, is that they're able to create an instant digital streamlined boarding experience. That's one of the more notable benefits is, when you go to Stripe or Square, 2 minutes later, you could be processing payments for your business. Whereas the more traditional payment processors have very long, very manual, typically PDF or paper-based application processes. And so there's always been a lot of advantages to that payment facilitator model. It's the reason why companies like, Stripe and Square and others are dominating the landscape. But the problem was always the process to go become a PayFac. And that's really where PayFac-As-A-Service comes into the mix. So traditionally, it was a 2-year multi-million-dollar process to go become a registered PayFac, which, if you're doing $40 billion a year, of course you can, go through that process. But for your average, Series A, Series B, vertical software business, that's not realistic. Your investors are not going to give you, several million additional dollars and wait all that time, for you to go through that process. And so when I started Tilde about 5.5 years ago, it started with this hypothesis. And the question was, what would have to be true for a vertical software company to leverage the benefits of the PayFac model, but to go live in 1 week? And that's the journey we've been on for the last 5.5 years.
I'm just trying to process that in my head. It takes 2 years on average for a company not using the service like this to actually have that capability.
If you're building everything out from scratch and you're building the technology, you're building the team, you're implementing, policies and procedures, it's a very, very long process.
There's a lot of risk associated with that too, right? Because if you're not building things
Absolutely.
correctly, you also have compliance issues, things like that. But you already have the system basically, sounds like a week, right? So it's pretty much plug and play.
Yeah, we've gotten it down. Our first customers took about 6 months to get up and running on the Tilde platform. So still better, but not great. So far this year, we've averaged 9 days for the average company to come integrate to Tilde. And so we've really created this turnkey white labeled infrastructure to allow vertical software companies to quickly embed payments within their platform and ultimately start generating revenue from those payments.
That's fast. That's very fast. Then that brings up another question then. So, obviously there is a need for this, right? So what challenges are you seeing for companies who need a product like yours or a service like yours?
I think for me, when I look at the space as a whole, there's been this, gradual shift that's been happening where merchants are really clamoring for these, ISVs or vertical software solutions. But really over the last few years, what we've seen is that more and more of these vertical software companies are realizing that they have to start monetizing these payments. They can't afford to give away all of the revenue to Stripe and just pass along the 2.9% and 30 cents from Stripe onto their merchants. And so the real like existential question for these software companies becomes, well, okay, who do I partner with? How do I actually get this thing to market? And I think for a lot of these vertical software platforms, the only question that they're thinking about initially is how do I get the integration completed and how do I get to that day one of payments? But I think the bigger challenge is actually how do I scale the payments on my platform? How do I make sure that I can get all of the merchants utilizing my underlying software and all of the new customers that I'm signing up every month to actually transition to this integrated payment solution? And I think that ends up being one of the bigger value adds that Tilde provides to our partners, and one of the biggest lessons that vertical software companies that are trying to monetize payments for the first time learn is that it's much more complicated than just that initial integration and launch. The actual go to market and scaling piece a lot of times is actually the bigger hill to climb.
So you got me thinking, right? So I've done a lot of implementations over the years of different technology, and one of the biggest challenges I found when implementing any sort of new technology or service, it's existing infrastructure. Are there typically requirements that you have of your clients where they say, hey, you need to have this set up in order for us to actually do what we need to do?
Yeah, I think one of the things that we've learned in several years working across 100 plus vertical software businesses is the companies that are most successful coming and implementing Tilde have already implemented a prior processing solution, already have existing customers processing on their systems. I think for us, when we've had companies coming to us trying to build new greenfield integrations or implementations, it's a bit harder. Those are companies that are actually better suited to use something like a Stripe, where you want all of Stripe's opinions on how payments can work, whereas our solution is really designed to give you more flexibility, more customization, and the ability to really tailor a solution. But if you've not actually had payments as a part of your platform before, a lot of times you don't actually know what you want, and so those can become implementations, versus someone that's just swapping out, Stripe for Tilde. That's a really natural fit.
It's interesting, yeah. When it comes to these challenges, Matt, like you're making that transition, right? So it takes about, you said 9 days, right? So what kind of like performance difference is there from say like?
Yeah, I think when I look at the reasons why someone is going to make that transition and come over to Tilde, I think the first thing that a lot of people think about is pricing, and that's certainly one of the benefits of Tilde, but it's not even, I think, the primary driving factor for folks. But certainly we want them to be able to generate more revenue on every payment that's flowing through their platform. I think one of the things that we really put a lot of emphasis on is driving the attach rates. And when we talk about attach rates, it's that idea of like what percentage of your customer base is actually using that integrated payment solution. I think that's one of the bigger areas where we focus a lot of our time and attention on, to say, hey, how can we get to 70, 80, 90% of your clients leveraging this integrated payment solution. So for us, that's where we're leaning in, not just on the technical side, helping you through the integration, but how are you going to price this? How are you training your teams? Do you have the right collateral, the right resources? Do you need to make changes to your onboarding process? Do you need to make changes to your website? Do you need some battle cards, as your sales team are trying to sell this new, powered by Tilde solution against, Stripe or Square or whatever your existing merchants are losing? And so I think that's where we're, really putting a lot of emphasis in that planning process, is solving for that go-to-market motion. And a lot of that's really consultation on our part. We are, the payments experts. We've done this before, across many platforms, over the years. And these guys are coming to us because they want help, in this part of their business. And ultimately, when you think about what the goal is of most of these companies, it's trying to drive more revenue from payments into their business. And the two sides of that coin are, you can get the cost down, or you can increase the overall volume that you're processing, and ideally both. And that's really the allure of something like Tilde is let's get you in at a sensible price point. But hey, if we can go increase your top line by 4 or 5x compared to where you were, that's really where those like transformative gains are going to come from.
That's huge right there. Yeah, when you're really able to scale it up effectively. So that brings up an interesting question too, is obviously payments is anything with money, right? There's a lot of regulation, right? Like what kind of like regulations or even risks, should someone to be looking for when it comes to actually using a service like this, or at least have awareness of?
Certainly. I mean, I think there's a number of things to consider. If you're going and becoming your own fully registered PayFac, you're going to be beholden to the sponsor bank policies. So are you going through and doing the proper KYC and KYB? Do you understand, what MCC codes or categories that your companies, are processing in? So there's some basic kind of tick the box stuff, but really the risk comes in when people actually start processing payments. Are these fraudulent payments? Should we be, asking more questions? Should we be, requesting invoices on these? And for a first time payment facilitator, the expected losses are about 10 basis points on their volume in the first year, which a lot of people are not factoring, that cost into the mix when they're considering, other providers where they're going and taking on, all of this liability. And so partnering with someone like Tilde that's implementing Payfac-As-A-Service, you're not having to assume all of that liability. You're not having to handle the day-to-day risk questions. You're not having to handle the day-to-day underwriting. You're focused on your core business, not payments. I think additionally, from a regulation perspective, PCI is another regulation that people should certainly be aware of. And I think from a PCI perspective, a lot of folks are aware of PCI requirements from an underlying merchant's perspective, but a lot of the platforms that we work with haven't really thought about their obligations from a PCI perspective. So if you're touching sensitive cardholder data, if you're seeing the raw card numbers, that's a big liability for your business. And so one of the advantages of implementing something like Tilde is that we have a solution called our Tilde.js, which is a JavaScript embeddable element that you've probably worked with from some different providers over the years, but that really helps minimize the PCI scope for our partners and their merchants when they're implementing Tilde. So those are probably two of the things, to think about is who's taking on that liability for risk underwriting and chargebacks. And then, how are you, managing or mitigating your PCI scope?
So that leads me to the next question, right? So, obviously there's a lot of things that people have to consider when they're going to pick, a tool like this. So what opportunities or even like actions can early software companies actually take when they want to really bring on a service like that? It's like, I know you mentioned, having like a service like Stripe, but like what else is there, right? Because obviously you need money to grow a company, but that is truly, the million, 10 million, $50 million question. What do we need to start doing today to get us to the position that, where we can actually hit tomorrow or hit our goals?
Yeah, absolutely. I think one thing, if you're not ready to come implement, a solution like Tilde or another Payfac-As-A-Service provider, is really understanding how your data is flowing to whoever your current partner is, be it Stripe or, otherwise. We see a lot of folks that come to us that have partnered with, legacy providers like a WorldPay, and they think, great, we're going to be able to transition all of our customers over to another partner. And then all of a sudden they realize we don't actually own our customer data. We don't actually own the tokens and the payment methods, with this existing processor. And so even if you're not considering for years, switching to another provider, understanding who owns your customer data is an incredibly important step that you should take today that can protect you, in the future, whether you're selling the business or implementing, a service like Tilde. So that's a kind of word of caution, for those that are out there. It's definitely something to pay attention to.
Yeah, that's actually that brings a really good question too, right? So if another, if your current provider is holding on to customer data, how hard is it to actually get that data?
It depends on the partner, is kind of thing one. I've found that asking questions earlier on in the process when the relationship is good, it is a much easier process than typically when you've gotten to that point where you're looking to leave, a partner. it's not the best relationship. There's been some arguments, there's been some bad blood. And so asking for a favor at that point in time where there's not necessarily much to gain, for your current provider, I've seen some folks really, fight tooth and nail over that data. Whereas, folks that I had either consulted with before Tilde or, frankly, just folks that listen to us talk about this, that have gone out and proactively had those conversations with their existing, processing partners when they think there's upside in the relationship and they think there's more to gain, from you as a partner. That is actually the time where you have some leverage, to go, ask for that in your next contract negotiation. I think the problem is most people don't even know to ask. And so when they're going and signing up, for this contract with WorldPay, they don't even ask the question. And frankly, it's probably because they just assume that their partner's taking a reasonable stance on sharing their customer data, but not every provider takes that approach.
That's a really good point too, right? If you don't know, you don't know. You can't just assume things, right? Especially when it's something that's so critical to your operations, right? Having your customers' data, right? It's your customers' data. It's not the vendors. So by actually being able to really clarify that with them, you're like, hey, because right when the relationship's good, people are a lot more willing to just give things out, right? It's like, hey, we want you to be happy because you're going to stick with us, and we want you to stick with us. But like once you hate us, and we kind of know you hate us, it becomes a whole thing as like, well, how can we keep them longer, right? And that puts everybody in a really like very awkward and somewhat compromising position, right? Where it's just like, well, are we going to lose this data? Yeah, that's a huge deal. Right. I'm
It's a
sure
big
when it
issue.
actually comes to switching, you have to essentially rebuild. And I imagine there's probably some compliance issues with that too, if you have to go recollect customer data.
It's more a risk of churn. So if you think about, let's say you're a dental software platform, you've got 500 dentists, and downstream of those dentists, there's 10,000 clients that each have their credit card number stored for recurring transactions. If you actually have to go back out to each one of those customers and ask them, for their credit card detail, you are going to guaranteed see pretty significant churn. I think the gym industry is probably the most, well known for this. Like, how many gym memberships, have you signed up for that you ended up paying for way longer than you ever actually used, the gym? And if that gym called you and said, hey, Joe, we changed credit card systems, can we get your new credit card data? You're like, oh, well, actually, I haven't been in 6 months. I'm going to, cancel. And so that's a huge consideration for partners, is understanding what that transition process looks like for token migrations, which we do, week in and week out. And, certain partners like Stripe are very easy to work with. A couple of days we can do, a token migration. And then there's other partners. Hopefully this podcast is not sponsored by WorldPay, because we'll keep throwing them, under the back tire. But they're the partner that we've seen the most instances, of them really kicking up a fight, and not sharing, their customer data without, a battle.
Comes up, yeah, they'll fight tooth and nail to keep you. Yeah, that's one of those unfortunate realities, right? Where it's just like, if it's not specified early on and it's not in writing, then you could be dealing with anything.
Yeah, unfortunately.
So I'm thinking about this now as if I were running a software company, obviously I'm doing a lot of payments. We'll just say a hypothetical. My company, I own SAP. We'll say I really don't. That'd be wonderful if I did, but say I own SAP, right? They have a lot of services that people are paying for, right? So is it possible? So say that if somebody's using SAP and SAP is using what you guys have, are you able to essentially, trying to figure out how to word this. If a company was using SAP and then or they were using this payment software, would you guys be able to integrate the two? Or would it have to be done separate?
Yeah. So the way that integrating to Tilde typically works is that we are contracting with the software partner. So like SAP would actually end up being the Tilde customer. And so we would work with them to complete, an integration to Tilde. Our typical model is not going direct out to merchants, making sure that we've got integrations to all of the systems that we're using. We're typically approaching the actual software systems saying, hey, do you want to generate a revenue stream out of all of the merchants on your platform, that are processing payments? And so we would work with them and their team, to get that seamless integration in place. And what's unique about Tilde is that oftentimes it's not actually a Tilde branded experience down to the end small business owners. So if we're working, with Average Joe's gym software, it's going to be looking like it's Average Joe's payments to that actual, gym owner. And that's one of the big advantages of, the way that we built the infrastructure here at Tilde, is that we're giving our vertical software partners the ability to put their brand front and center with their customers, to the point that 90% of our software partners actually white label the Tilde platform.
That's very cool. I can definitely see why this is such a big need, right? And there's already a lot of companies in the space already providing similar services. So to you, what does the future actually look like, when it comes to payment facilitation? How do you see the landscape really changing?
Yeah, I think when you look from a macro perspective, there's been a pretty big acceleration in the last 5 years of this transition to what we consider software-led payments. And so that transition is going away from the legacy ISO agent model. So the world that I started in, where you've got, boots on the ground, college students going out there, slinging terminals to merchants, that has been the predominant distribution model for payments for decades. And we are seeing a rapid acceleration of this shift to software-led payments, where vertical software companies are powering the future of digital payments on behalf of merchants. What has yet to happen are all of the legacy payment providers acknowledging that shift and making a meaningful improvement in their technology solutions to be able to provide a compelling solution to these vertical software companies. And so the big guys that have been dominant for decades because they had the distribution through ISOs and agents are waking up to a new reality right now, where that distribution model is shifting in favor of ISVs and vertical software companies. And unless they improve their technology by building, buying, or partnering, they are going to be left in the dust in this new reality. And so my expectation, if you look kind of over the next 5 years, is that you're going to see, all of the top, 20 guys in the payment space either building, buying, or partnering their way to having a better solution in this ISV vertical software PayFac, as a service ecosystem. And we are certainly, positioning ourselves to be at the forefront of that shift, where we already have multiple partners that are working with us and actually white labeling the entire infrastructure that we've built out. So some of the biggest names in payments that wanted to make this transition to PayFac-As-A-Service, but they didn't want to spend tens of millions of dollars in 5.5 years building it like I did. They wanted to, approach me and get in market in a couple of months and have a fully branded solution. So that's one of the things, that I expect to see over the coming years, is these guys getting more competitive in this ecosystem.
Yeah, that does make sense too, right? It's one of those things where you have to adapt or die. So one of the things I think of too is when you obviously have these like very large legacy companies that have been around for a while, right? And they do dominate a lot of the space. And obviously, since they have such a strong brand, people are likely to go to them. Now, what's the impact if they're like, hey, like if they take like say the Toys R Us route, right, or the Blockbuster route, where they don't really update their technology, they don't update their infrastructure and their practices, like what happens to their customers?
Yeah, I mean, right now, I think there's still, several more years where we're in this transition period between these two distribution models. And so I've given a couple of talks at conferences where I talk about the death of the ISO, and it's typically to a room full of ISOs. And so it's a bit tongue in cheek when I'm talking about this, because right now I believe it's more of an opportunity than a threat. And so I feel like the players that actually get out ahead of this and acknowledge that the shift, is happening, and proactively go make investments, have the ability to actually go capture market share away from some of their competitors. So that's the opportunity. The threat is if you wait too long to acknowledge that transition, make the investment, and invest in the technology, you are going to continue to see that market share drop in favor of, solutions like Stripe, Adyen, and others that have prioritized these investments in the experience for their partners.
Yeah, and then it's going to be even harder to actually make that transition too, because you're not going to be, you're not going to have the capital to actually start investing in this technology, to invest in the process, even investing in the people who can actually bring this new capability to your company. Yeah, that's a very challenging thing too, because those who stick with those companies who aren't making the transition as well, they're also going to feel the effects, right? They're going to have most likely compliance issues, they're going to have performance issues, and they're even going to have cost issues, right? Because for those legacy companies to really survive, they're going to have to increase. The longer they delay, the more they're going to have to increase costs just to try to stay alive,
Yeah,
right?
you get into this
Until they
death
get acquired.
spiral. Yeah, you get
Yeah,
into a death spiral where you're not signing new customers, so you increase the pricing on existing customers, and then you have more churn, and then the spiral continues.
yeah, and it's a lose situation. Nobody wins here, right? Where it's your company, your customers are really paying the ultimate price, where you're doing everything you can to keep them around, and meanwhile your company's just dying.
Yeah, I'm excited to see kind of how this plays out over the next couple of years, where I think you'll see this shift from the big guys just consolidating legacy distribution channels to actually, looking at how can we, invest more proactively in our technology.
And that's a big thing too. So when it comes to investing, right? So payment facilitation as a service, right? When it comes to actual technical or investing in technologies, especially things like AI and machine learning and a lot of other technologies are really coming out. Where do you see the future there?
That's an awesome question. When I think about the experience that we're providing with our partners, I typically think about it in three segments. There's the onboarding piece, there's the actual payment component, and then there's reporting. And I think there's areas of opportunity across each one of those segments for AI to provide a role. So if you think about that initial upfront boarding process, how can we get access to more data, cleaner data, and make more intelligent decisions so that we can improve the percentage of merchants that we're instantly approving? So we want to approve as many merchants as possible in a 3-minute window. Well, pre-AI, there's a limit to the amount of data sets and the amount of data that you can process within that window. Whereas now, let's go pull in as many data sources as we can and make more informed decisions. On the actual payment piece, when you're looking from like a fraud monitoring perspective, there's a number of just tremendous AI tools that have come out that are far more capable than a human in real time of evaluating the potential risk of fraud, passing back a score, and then you can make those real time decisions. And then on the reporting side, anything that you can do to help improve the reconciliation experience for merchants is huge. And so I feel like across the entire stack, there's areas of opportunity here.
Makes perfect sense too. So I do have one last question for you, Caleb. So I mean,
What do you got?
obviously you've been in this space for a while, right? You've learned a lot, you've experienced a lot, right? And there's a lot of entrepreneurs out there who they're really trying to put it all together, right? And get those insights that really going to help them make competitive and also, hopefully change the world, right? So if there's any one piece of advice you could give the audience, what do you think that would be?
I think we've spent enough time in the weeds of payments. So I'll try to give some advice that's a little more generic to all founders out there. But the reality is, regardless of what business, what industry you're operating in, we are all in the business of people. And for me, having scaled up my first business and now having scaled up Tilde, one of the big lessons that I've learned is the power of feedback. And so as you're building up your team, it is incredibly important for you as a founder and your leaders to be incredibly gifted at delivering especially difficult feedback. It helps level up your team. It helps level up the leaders around you and ultimately helps the business, operate faster. So don't sleep on the power of feedback.
I absolutely love that, man. Yeah, I think that's one of the best pieces of advice I've actually probably ever heard, right? And I think that's helped me a lot too when I have leaders give me feedback, but also leaders who take feedback, right?
When you're
That really
comfortable
does.
in that difficult moment, providing that message, because ultimately it's a gift. If you're needing to deliver that feedback, it means they are not meeting a need or not meeting an expectation, that you have for them. And the faster that you're able to communicate that difficult, feedback to them and they're able to level up, the faster the business is able to execute and move.
Yeah, absolutely, man. That's amazing, amazing advice. Like I could not agree more. Caleb, thank you so much for joining us today. And to those listening, really hope you enjoyed this. And once again, Caleb, thank you. This is Caleb from Tilde. It's a PayFac-As-A-Service company doing really amazing things. Stay tuned next week for another exciting episode of Thriving in the Digital Age. Thank you, everybody.
Awesome. Thanks, Joe. Appreciate it.
Thanks for tuning in to another episode of Thriving in the Digital Age. We hope today's episode gave you some great tips for navigating and rocking the digital world. Remember to hit subscribe for more awesome tips, strategies, and expert talks on thriving in the digital age. Stay connected, stay informed, and keep on thriving.